Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Yeah, let's see what the news is going on with the news. News today, yesterday, Sunday, nothing happened too much. Sunday, Monday, I should say something here about banking holidays. There it is, Canadian dollar all day, banking holiday. So we're going to probably get a whole lot less volatility, especially today for during the New York session. 10 o'clock, we have ISM manufacturing report. That's a red folder. That's at 10 o'clock. And usually whenever you see these red folders, it's usually things get to be pretty quiet up until then, and then it starts getting a little bit more active. So I would not be surprised to have a pretty quiet morning this morning. And Monday mornings traditionally are not real strong trading days. So if you're going to take a day off, Monday's usually a good day. And especially if you're profitable at the end of the week, Friday's not a bad day to take off too. So it leaves Tuesday, Wednesday, Thursday, that are probably your best trading days. So we'll look at the heat map. You look at our Hercules and see what's hot and what's not. And up until a few minutes ago, the Aussie was at the top of all time frames. Now, let me just remind you that the upper left and upper right frame, those are higher time frames. I start with the upper left on the 1 hour. The upper right is a 30-minute. The lower left is 15-minute, which is the one, my main focus chart that I usually use. And the 5-minute is the one on the lower right. So when I'm scalping and trading, I look at the 30-minute, but I put most of my focus on the 15-minute and the 5-minute charts. So just keep that in mind. So right now, as I look at this, I'm seeing that it's still kind of all over the place. That a few minutes, like up until about 5 minutes before we started, it was the Aussie was on top of all, and the British pound was on the bottom. It's still pretty much hanging in that direction. So we're going to focus on that chart first and see where it takes us. So I got the British Aussie. Now, the fact the Aussie was the strongest currency and the British was the more weaker currency, we're going to be looking at the strength to the downside on this. So we're going to be favoring the Aussie strength to the downside. So we had a nice little pull down. We drew our Fibonacci zones. This is the zone. And it's kind of right now, it's kind of in that overshoot area that I often talk about. So I'm not really seeing anything to really hang my hat on, but I would be looking at, let's see, let me get my little zone here. These are some of our 2-minute zones. So right now you can see where the blue area where the bottom of our Fibonacci range is. It's breaking right down. So I'm going to be looking at this little area right here for a somewhat of a bottom. I'd like to see it right now. I'd like to see a little bit more of a commitment that's going to go to the downside than where it is. So I'm going to, this is a 2-minute. 2-minute, what color was that? Red, I think. 2-minute red. Yeah, be a 2-minute red. So I'll mark that. So right now, this is the range we're looking at. I'm going to be pretty much focusing on the 5-minute. I drew my, if this thing decides to turn around, this will be my first target on the upside. But right now, we're looking to see it go to the downside. And so if we're looking for the 5-minute target to the downside, I can find it here. I'll be looking right about this point, right in this area. So let's see if we have 15 pips to that. 5-minute, let's see what color is that. Green, this should be red. No, that'd be blue. 5-minute blue. Or is it? No, it's red. That's a red one.
It's one of those colors. I can guarantee you that.
It's red, green, or blue. It is red. Red wins. Here we go. There we go. So basically, as we're looking at this price action here, now right now it's been kind of flat a little bit. It's just hanging right around this blue fib line. Here's our upper 25%. So it's right now it's in that lower 25 and actually went down below that. So we have to be really kind of careful with this to the downside because it's already had a nice big run. And this thing's already gone from, let's see, the peak high of It's already gone 60 pips, and that's a pretty good run already. So we're going to be real careful about trying to take this thing short. We want to see, I'd like to see a little bit stronger pullback, and maybe come back and retest this. But we have a little bit of wedge right in here. Here's our first move down, first pullback. So here's where I start the big trending. If you look at these long ranges, this is what I would call these long extended range candles. But we're looking at this on a 1 minute chart. So we'll just figure that this is all one candle. Let's see, what's the time on that? Let's see. You can think of this as like a 125-minute candle. And then we have a pullback of about 6-7 minutes. So it's trending from here. There's wave 1, wave 2, wave 3, wave 4, 5, 6, 7. It's pretty much, I'm thinking it's pretty much getting near the end. You can see there's a lot of consolidation in our moving averages right around this level. And so if we get a nice strong pull up and another retracement, I might be looking at reversing this position. And you can see, like right now, the British pound is taking control on this 1 minute chart. So it is still, I don't want to be taking it short, but I'd be looking for a place where I may expect this thing to turn around. So if I put my fibs on here, here's my 2 minutes. So here's the next 7 pip target. Now these are going to be pretty much 7 pips away between this target and this target. That's going to be this is our 15 pip target. So if this thing gets all the way up to this green line and pulls back, I'm maybe looking for, I'm thinking this thing's going to reverse. I don't know. What do you think, Brian?
It'd be temporary.
I'm thinking, yeah, go ahead.
I'm looking at the strength meters as you're talking. I'm just seeing it stalling out for a little bit. Al looks at scalping. I look at more scalping day trading. So I'm looking at higher time frame stuff. I think he's got room to go long. But where it is in the overall position, I think it's still going to go down.
Yeah, I let's just clarify one thing. As long as this on the 15-minute chart, if this is showing the strength, and right now I've got a 7-point spread on the British Aussie on the 15-minute. I've got a 4-point spread favoring the Aussie on the 5-minute. I'm not going to take this thing short. I'm going to be waiting for a pullback. I'm not going to take it long. I'm not going to do a counter trend or counter momentum. I'm going to wait for this thing to pull back. We already had a little bit of a pullback because we saw that the British pound was strong temporarily right up in this little area right here. So that could have been the pullback. But right now I'm looking at, if I look at a 1 minute chart, I'm looking at, here's where my triangle is. Here's my high. Here's the first leg. Here's my lower high. Here's my higher low. And so right now it's stuck inside this wedge right now. And if I look as I get closer to the end here, you can find out that you have less and less room to take the trade from the one extreme of the wedge to the other extreme. So right now the wedge itself is only 8 pips wide, which means it's starting to pull up. I'm going to be waiting for this thing to break out of a wedge in some direction.
He's got what you've done, Al, on where your wedge is at. He's actually just identifying what he's not showing on his screen yet is the Sherlock tool has a demand zone that's where it's bouncing from. So where it's bouncing from is exactly what he's talking about. Taking it basically be counter trend trade, but you could get your 7 pips in that short, up move. Exactly. Overall, the movement's still down, but it's just respecting there's a zone at 8886 to 8880, Al. 8886 to 8880.
There you go, find that.
And that you've hit it a couple times and it's bouncing off of that. You also have a blue fib number at 8891, and it's finally closed below that. That's all on 15-minute chart, by the way. Okay, your playground. 8886.
8886.
Mm-hmm. Yeah, the 8880.
That's yours. And 8880.
That's on your 15-minute. That's your playground. You can see how it's just cut. Yeah, that's how it's come out of that. And so it's just respecting that. There is no supply until you get up to the 8940.
Well, that's way up there then.
Yeah, that's why I said you may have some room to move. That's on the 15-minute. However, when you go to the 1 hour chart to see what really is happening, the 8905 is actually your supply.
which is right here. We're 89.05.
Correct.
It just happens to be that fib line right there.
Right. Is exactly where you have new supply on an hour chart, which is your Sherlock tool telling you that. So when you said you could go long, I would just make sure you're going long and get out before the 89.05.
Okay. Yeah, I mean, bottom line is like, if you look and see where we have this high, lower high, if you draw just from those 2 points right there, you can see that this is the area where I usually get really concerned that they're going to try and head fake you. These are the areas where I call a trap, because it breaks the wedge, it comes up, wicks up around the C, but it can't quite break this A mark. So right now, I'm going to identify this as being a trap. So our true range that we're really looking at right now is the demand zone to go lower if the strength to the Aussie stays, or if it comes up and head fakes this, I'd still be looking for it to go low, but I'd like to see a little bit more confirmation. The higher up this thing goes, if it breaks up here, it would, if the strength to the downside still maintains, it'll give us a little bit better entry to this. But right now, as long as it's inside this little area where it's playing, I'm not going to be too interested in taking it. Now, and so the other trap area that I would be looking at too would be right in this area right in here, again, where the B and the D kind of could align. Oops.
And just so you are aware, on your 5 minute, you have another demand zone at 88.77. So it's playing the fib numbers almost exactly, because that's the 76% line on the 5 minute chart. I'm going to drop down to your 1 to see what you're facing right now.
Yeah, so I mean, so right now, the fact it's been right now, it's been in basically an 8 pip move. We've got a 2 pip spread on this thing, so there's not enough. I said I'd like to see I'd like to have a target of at least 15 pips away, because I'm only trying to get 7 pips out of it. So
you can really see that wedge. I can tell you that on the 1 minute. Very clear.
You see how it is, and as it gets closer and close to the end, it's going to break and be more convincing one way or the other. I do like seeing a 5 minute candle break through and then retrace. A lot of times you get that 1 minute spike that's just a real quick spike come down. Everybody says, "Oh, okay, I'm going to get in, jump in." All they do is come back, and then they take your stop, and then they go and they take it down. So sometimes there's a couple wave action before, but right now, if it comes, it breaks this lower trap area, comes back up and retests the wedge, I'm going to be looking for it to come down. This will be my first target. I'm still looking for this being more of a short, just by the our Hercules here on the 15 and 5. It still has to spread. Like I said, anything more than a 3-point spread, I don't want to take it in the opposite direction of the strength. So we have this. We're looking at. Is there anything else? What's next? Let's take another look and see if there's anything else to be got. So we have British pound is still weak. That's confirming weakness to the pound, which helps to confirm our short position on this thing. We haven't taken the trade yet, but our plan to take it short. And see, the euro, that's been in the middle. The yen is. We could probably try the British yen. We could try that and see how that one looks.
Another one I'm in. And it's just wavering.
So we're going to come over here. We're going to take a look at this, see where our zones are. And we have now with the yen pairs, a lot of times I may have to give it, I usually trade off the 5 minute with the yen pairs because of the area in which where the zones develop, because of just the currency pair, how the numbers are. This is like 152 dollars to or British pounds to 152 yen to a British pound. So the direction or the ratios of the zones are a little bit different. But here's a nice big move down. We get a nice little wedge. This is like almost like a drop, a low basing, and then another drop. Right now it's playing inside this area. So we'll draw our fibs.
I've got an entry sitting at 152.38.
238. That could be right around the 50% line. I'll be
That's where I'm sitting. Yeah.
Put my 50% mark on there.
It looks good. I mean,
yep. And so when I use, I like this tool a lot too. This is the extension here. I started with the top of the move, come on down to the bottom. And then I like to see a 40% pullback. And I usually, that 40% is right when I get these little lines right here lined up to the bottom. And then this would be my stop area from where this would be, this is where I put my stop. Now that's going to change depending on how high, how far against it goes. And then would be my target with a 1-to-1. If this is a drop, base drop, then my down target's going to be down here. And between the 78.6 and the 1-to-1. This would be a target.
And what I did is I put a little position at 152.23 and then just watched it. And then I've got my real position higher up. It's doing the same thing. It's kind of forming that wedge that you showed on the other one.
Yeah, now I'm expecting this area right here to hold. So I'm going to make this whole area my stop range. So if it comes up to that 50%, I've got a really relatively tight stop. Take all these off now, so we don't need that anymore. So I have my zone set. So there's a nice little, you can see it here. I'm on a 15-minute chart, but you can see this little area right here. That's a nice little wedge going on right now. If I go to my 1-minute chart, and you can see that I can draw that nice little wedge formation. Here's a pivot high. Here's a pivot low. Lower high. Higher low. And you see it's just trying to break out right now here. You can see that nice, it broke. We didn't get the close yet. I didn't get the close below the ST mark. Oops, let me just do this here. Tweak this out. There's another little higher low. So here's an anchor. Here's a hit. Here's a hit. Here's my anchor. Here's the first, there's a hit. There's a breach of this triangle right here. And let's see where we're at. This is the British yen. Hit the break, came back up, retesting, and right about this point, let's see what it looks like on our strength here. The yen is strong, the yen is strong, the yen is strong. We had break of the wedge. I'm going to put a buy stop or a sell stop in right around in this area up the 152.25. So I'm going to,
which is where I got it. Yeah.
Sell 152 sell stop 152. See if I can get in there. I may not be able to get in that low. I got to get below this bid point. 152.25 sell. I'm just going to get a little bit bigger position on that. Stop is going to be 15 pips, but I want 1% risk. That means I can take it 30,552. So let's do that. Sell. That's a little better. Okay, so right now I am in the straight, and I'm going to be looking for a target set my target, 7 pips. And it should be right down here around the, let's see what this
17 area.
It's right around 17, 152.17. Is that what it is?
It's close. Yeah, that's where I'm at too.
Let me see where my zones are here. 152.09 is right at the blue line, so that would be a good target to go. Let's see 22 to 9. Yeah, that would be good. We'll just put the target right here, somewhere right around in this area. Let me get it. So see if I can find a fib line.
Let it run.
52.16 to, we got in at roughly 24.16, that'd be 7 pips. Yeah, we can put the target right here about the 152.16. So I'm gonna come over here, modify it, get my target in there.
Hey Al, can you take a look at the attendees to see if you recognize any names from my Orlando?
Yeah, I've been looking. I haven't seen
Any of you guys went to Orlando? Anybody go?
Yeah, is anybody here go to Orlando? I just got back from Orlando.
That may be a better way of doing it.
Yeah, I walked in the door about 2:30 in the morning, but I got back Sunday night and it was a great time. It was a great event. Hopefully you guys will be able to get a chance to see the video that they made. A lot of energy, a lot of big energy out down there.
That's what happens when you're young. I was watching online. I was worn out.
Are you saying Al is older?
I'm saying I'm older.
Hey, Al picked up swag down there.
That's what I heard. I hope you go see a doctor for it.
Swag or swagger?
Swag. I went in there and
you never know.
Dante was the MC, and so I could walk in there. Al, he said, Al, you got swag. I said, Dante, I've never once in my life been accused of having swag. But I said, I came here to ride the wave to get my swag. You can see this thing starting to take off here pretty good. We caught that just right. See how it broke out of that wedge, came back up, tested the wedge, and then we got in. We took a little market order. Right by the time I got the order in, I was already pretty much there. So it ended up being
and look at your Hercules tool. Everything's pointing up.
Yeah, you see the Hercules? It's still strong. We still have the gray one is the Japanese yen. The purple one is the British pound. You can see that's strong. It's by 7. That's strong. Right now, it has taken over, and so we're coming right into my target area, my first target. Now, once I get my target, I've got a couple choices. I can just say, and if it starts to bounce off of that, I'm just going to take my profit on this.
Yeah, remember there's that demand zone there. So
you see that? See how that just, oh crap, there it goes. It came right down to that point, and we have a spread, 2-point spread. And those, once you start getting these target areas, watch that spread. They'll start playing around with that spread a little bit, start widening it out a little bit on you.
Pound Aussie.
You
Pound
get a lot
Aussie's
of
moving too. Back
is
to
it?
your
Okay.
Yeah, that one's moving too.
The British Aussie. Let's see, this is the one. This is the yen, British Aussie. And there again, we're looking at the Aussie as the second currency, so we're looking at this thing to go on down.
And again, remember we're in that demand zone that we marked off.
It's breaking the wedge. It's hitting right here in that little trap area. So we got to be a little careful with this one. Yeah, right. This is demand zone. Now, if it does break through all this and gives us some confirmation, we're going to be using this for our target.
And strength meters are all pointing up. That's a good sign too.
And so here is a nice little drop, little base, and then we can look for another drop again. Now this thing it would not totally surprise me if it would to come up, get me go exceed past my entry level. We have a blue line right in here. So I'd be looking at. I'd like to have my stop. I'm going to be looking at my stop being somewhere around here. Although I'm not going to put it there because that I'm going to call that my stop zone because they like to look for stops. And so I'm going to be looking at this area right here.
Is that the same stop zone that you have on your 15 and 5?
It is a good question. Let me see. I don't think. No, the stop zone on the 15 is way up a little bit higher. The stop zone on the 15 is right at the bottom, or my stop is right at the bottom of that zone. But I'm looking at this right here as a little bit more of a, if it starts breaking this area right here, I may have to start thinking about reversing. But I'm not thinking it's going to get up that way. Like right now, it still has all the strength to the downside. So this is just a nice little pullback. So we're still in this trade. I'm going to
Anybody taking the trade? Anybody taking the pound Aussie trade in the room?
Not
Besides
me.
us. Besides us.
Well, you know, Eva doesn't like trading the.
I don't like the currencies. They don't like me, I should say. It's not that I don't like them. They never cooperate.
We got to get you a different book to read then.
No, I'm fine with my indices.
It's what did Henry Ford say? That he says, if you think you can or can't, you're right.
No, it's not that I think I can't. I know I can't. There's a difference.
See,
I have
there you go.
And then you're right. Then you're absolutely right.
And you're absolutely right. There's nothing wrong with that.
Yeah. You know what? I do really well at the indices. Why would I even want to bother?
Well, and that makes a good point. Now, find what you're good at and just keep on doing it over and over again.
Exactly.
Wash, rinse, repeat.
Exactly.
So here's what I'm going to use to see, Mark. This is the last high pivot. I'm going to come down here, pull it back to see how far it comes back. Now, if it comes back to say like this area, say it comes back to where my stop zone is. I can have a reasonable expectation. Oh, which one I move here?
Jody,
I don't need this. I don't need this.
By the way, guys.
I don't need that anymore.
You broke up, Eva. What'd you say?
I said Jody Ann took the Euro-Oz.
Euro-Oz.
But you guys are doing the British Oz, right?
Yeah, we're doing the British Oz.
Yeah.
Okay. It doesn't fit quite the structure that I use, but I can see why you'd go that. It's ugly going if you're short, it's kind of ugly moving from here, but a lot of upside potential for this, at least in the future, for the Euro Aussie. Yeah.
I'm just looking, this is a nice pullback. We're coming back. These are coming back together, but we still have the strength. We still have the strength of the Swiss and the weakness of the British pound.
And so I put an order. I've already taken the profit on that one because it hit my 7 pips, and then on that one move. And then I've got a set and forget type order at the 152.25.
22. So it's very much right again, right? So basically, what he did, he got in, took his profit, comes back in, takes another position, and then he's going to probably try to ride that wave on down. If I understand your technique.
You understood it very well.
Yeah.
But my target's still going to be above the 152.10 because that's that blue line, and I don't trust it.
That's the little 2-minute blue line right here.
It's also your 15-minute blue.
Is it 15-minute? Yep. There you go. There's some significant areas right here. So mark that 15-minute.
And for those who have any financial background, it's also a 10. 10 and quarters are big in the industries as far as institutional and banking. They don't deal with little. They would never get an order at 152.21 or something like that. They don't care about that stuff. Their money's big enough to where they'll move it where they want it on the easy stuff.
Nice little pullback. All of our moving. See how this green moving average came right on up. The yellow line just got tagged. And we could probably even take another sell stop here. Yeah, a little bit late. Right now, I'm still looking for my first target, and then keep on going down. Now, the fact that it made this pullback, I could possibly. I'm not going to get greedy with this. I'm just going to get my target, get my first trade in the day, first trade of the week, get profitable, and put it in the record books and saying another win.
Kind of where I'm at right now.
And that's what I think is really important is that don't worry about the amount of money you need the position size, but be more concerned about your track record. Be concerned about your record of consistency, because the more consistent you can become, the more you're going to trade that BTE indicator, the indicator between your ears, the more you're going to be training that to be looking for certain setups. And then as you do that, as the consistency comes, so does the account size. So don't worry so much about the dollar amount of the trades, especially early on. Just take small positions, put a little skin in the game. Not until you're totally comfortable with the methodology, but once you start feeling comfortable with the methodology, start using with small positions. I mean, you can take it down to zero, like a 0.01 lot size, and you're looking at 10 cents a pip rather than $10 a pip.
Candy bars for hamburgers.
And once you get consistency making the candy bars, and you up the size of the lot size, you start trading hamburgers for steak dinners.
And then cars for houses.
And then retirements for freedom.
Sorry,
This is philosophical morning here on the Hawkeye channel.
and this is all with the migraine. Think about that, Christine.
Yeah. That's probably why everything's blurry. I literally dug myself out of a major hole back when I traded candy bar. Al remembers it. The candy bar for hamburger. Yep. I remember just frustrated as all get out. And it really slowed me down. And then I had to learn how to go play golf and leave it alone and let it do its thing.
You see, it's struggling right around this little area. Let's see if start watching those spreads a little bit. See if they start widening the spreads. If they start putting those spreads real wide, that means basically they're trying to reverse positions. Coming very close. If it doesn't get me out this time, I will. Now this thing should get me out of this trade, but if nothing else is going to get, if it doesn't get me out now, at the very least, I'm going to get out and maybe take another shot at it here.
Mm-hmm.
You see how it's already past my point? It still hasn't closed me out, so I'm just going to close it out myself.
And you took profit on it?
I just closed it out. Yep.
Yeah, I missed that stop.
Oh, close closes. There we go. Now I'm out.
I'm sitting and waiting at this point. It never came back up. It may not, but all depends on the momentum. And the picture will change if it closes below the 152.10 for me. The picture changes, and then that means I got another opportunity.
See, right here's where my target zone was. Here's that little green fib line that's coming right in. It's just bouncing off that, but you can see that a nice little bounce. And let's see how it does with this more extended range target. If I had gotten out that first time for the pullback, I've gotten in, and then I'd be using this for the target. But right now, you can track it right with this moving average, and I would keep at the highest point above where the moving average is. So that's this point right here. I'd be looking at my stop zone being right around this area, right around this point.
I would not tell you anything to scare you, but if you're looking at the 1 hour, you would not be wanting to day trade this particular. You would definitely want to stay scalping.
Oh, what are you looking at there, Brian?
I am looking at the Sherlock, and I'm thinking, oh my God. Y'all want to see it?
I'm trying to put it up here. Let's see.
I'll share mine since mine's already there, and you can stay where you're at, and then I'll turn it back over to you.
I'll stop sharing.
This will look kind of messy for those who are new. Don't freak out. It's just a tool. It's just messy. And we'll explain what all this is. Can y'all see that?
Yep.
It just tells you got, we got 4 reds and pinks, or orange and pinks. We got a bunch of green, and all of our moving averages right here in the middle. We're trading right inside of here. This is an hour chart. So we're trading inside of a demand zone that's almost gone. And then we talked about that 152 being so strong. There's a brand new, fresh area of demand on the 1 hour. This would be good for a 2-3 day trade, because this will be gone. You take your entry here, ride it up to the 61. That would be what you normally do on a longer scalping, but in scalping, it looks different. And then your meter down here tells you to be long. So majority of people are short this particular. But this is going to be a pretty good wall to get through.
So Brian, that dark green zone,
Never
once you get out
touched.
of the light, that's a stronger one than the light green. Is that right?
It's never been touched. It's never been back there yet. This
Oh.
one's penetrated. You can see the penetration line right here. We're at it and we're going through it. This one probably will be gone here in after the next hour. It didn't quite get the hour closed before it reached it. So this will be gone. That's why I said I have no problem taking along at the 152. Just understanding the 152.10 is the strong line. But that's a strong line. If you notice on the 1 hour chart, blow this up just a bit. Squish and squash. That's a very, very technical term you need to learn to use. This line right here is a green line. Now, we mentioned it being blue on the 15. Green is a strong area of support. Notice where the candle is touching right now.
Say, Brian, not to interrupt you real quick, but right now that the British yen is in the target zone. Just if anybody's in that trade, you may want to be thinking about taking the profits on that.
Go to your screen. We'll show it on a 15-minute. I'll stop my share.
I can find my screen. Where does it go?
Yeah, it's just hitting that 152.10 area, just like we said it would.
Here we go, like this area right here. There you go. Seems right in that area.
Mm-hmm. This is definitely where if I was a short, I'd be getting out. Doesn't mean it won't continue on. It just means that this is a potential area of a turn, fake, a head fake, and then have a big bounce.
Now, see, now let me just show you again how I determine this area here, right? In this, so here's the drop. Here's a little retrace, and like when I said that it'll retrace it. Oftentimes, when you get a nice drop like this, comes down, you get the pullback, and it's going to go from the pullback area. It's going to go to 1-to-1. So right here's you can see right here's where the 1-to-1, right, and this is the 78%. So this is the area that I look at, and you can see it just wicked down and came right back up again. So that's how I determine that target. We have nice strong move down, small pullback. This thing pulled back about 38%. That was that 30. If you look at your fib lines, it's going to be that 38.2% retracement, and then it went back down and extended this the same amount, same leg.
Because of this extension, the way this candle worked out, I moved my entry to 152.23 now instead of 25. That's the actual fib number for it.
And, this was as we drew our Fibonacci's on that 15-minute chart, and we draw between these 15-minute institutional levels versus the institute. But you can see where it came right to that level, and it hit the level, and the institutions said, "Okay, we're going to buy some more back in here." Or people were taking the profits right at this level. Now, whether it's the institutions doing it, whether it's people like us doing it, doesn't really matter. The prices are happening at these levels.
Self-fulfilling prophecies.
Self-fulfilling prophecy. So now we drew this other area. This was a zone that you had earlier, I believe, right?
Mm-hmm.
So if it breaks through this, it could very well keep on coming down. It still has the strength.
Or it could be a huge head fake. And go down to the 152 area and then make a big turn.
But bottom is we had a nice position size. We referenced 1% of our account. We took our position and we hit our target. So there's 1%. If you're looking for 5% a week, there's your one trade for the day, and you can walk away. Now you can have a date, have some time to yourself for the day, and you're in here for a rip-roaring 40 minutes.
Yep, I'm just going to sit and not chase it.
No, I think I think we could probably see another little bounce, and you can see if it starts to trend. Like here on this 15-minute chart, here's the origin of the move, retracement. Now, if we were to take it from this origin to this retracement on the 15-minute chart, you're going to see that our targets can be significantly different. Again, let's draw it out. Here's the origin of the move. This is that big extended range candle right here. Came back up, retraced. Here's our stop zone. Here's our target. Here's our 1-to-1. Move it up here a little bit more. This is the bigger zone that Brian pointed out today. And so that's really if you're looking at to try and day trade this thing, this would be your target for the day trade. And you can see this zone here is below the blue line. So we are having some problem getting through that. But as we draw this out, you see here's a retracement. It's going to be extending the wedge. So right now we have a high, a low, a lower high, and a lower low. So I can actually move this little wedge right down here to the bottom this way. Maybe I can't. Let's see it. Take this off. Try to draw it again.
The wedge myself.
Well, we have now. Actually, it's actually what's doing is now forming a channel. High. Here's a low. Here's a lower high. Lower low. Let's move this thing over. And here's our channel. So really, if you just draw just the trend lines, let me just draw just with just the trend lines. Just take this off here. I don't want to confuse anybody. Here's where we had a drop. Here's a little basing. So I'm going to use this pivot. Come over here to the high. Here's our low. Here's our lower low. Here's our downward channel. Pulls back up to the wedge. I'll be looking at my stop zone being up around this area. I include that little wedge there. But you see, as you get on higher time frames, you're going to be extending but you want to give it lots of wiggle room. So right now, as long as this stays below this blue line, comes up the blue line, if it gets rejected, take it down to this one. If you look and see for your targets, this is where tactical trading comes in, technical analysis, being able to read the charts, being able to find the patterns. Here's our stick. Here's our channel. Here's the first, let's see, here's the first hit. Here's the last hit. What if we do take this stick, take the last hit, and see if it can come into this target down here. And if I go to a lower time frame chart, or if I put my fibs on, you're probably going to see a fib line somewhere right around that area. Here's a green, the red 5 minute. I draw these overlay these things just so you can see what Fibonacci time frame I'm referencing. But not only that, sometimes these things are kind of hard to see.
We're working on that.
Yeah. 5 minute red, 5 minute red, right there. So that's really the ultimate target. And we'll see where it goes. See if it comes out. Here's a little drop. Here's a little bit of basing right now. So this wasn't room to the downside.
Let me ask the guys in the room, if I were to put just a basic trade plan together, what we do step by step checklist, obviously not telling you what pairs. You can look at the Hercules tool and pick whatever pairs you want. But if I were to put together a basic scalping plan that you can kind of checklist and follow, would that be helpful? If so, put yes in the chat box is fine. If you think it'll help you, having something that you could print out in front of you. If not, then I won't worry about it. Okay. If I got one person, I'll do it. It's not hard, but it'll give you something to look at and something to go, okay, that's making sense. What it'll do is it'll tell you, okay, what tools we're using and how Al's using them. Now, I'm going to do it for Al, and then I'll do the same thing for our swing sessions for those who are in the swing sessions. And then you'll want to kind of build the same thing off of what Eva starts talking about her indice stuff. It'll be a little bit different, and you can mark up on it and do whatever you want with it, but it'll be there in front of you. So when we're not here, you can kind of refer back. If you're picking your own pair, am I following the checklist? Because that's the fact is if you're a noob trader and you're not profitable, imitate the ones who are. And that's the problem with most traders. They want the quick, easy, and they don't understand the steps. Al and I, we were talking last night even. We see things before that you guys, we're talking about the Sherlock tool. He was telling me, I don't need it. And I said, yeah, but they do. And we really don't need the Sherlock tool. Al and Eva probably doesn't either. But what it does for us is it confirms what our eyes already see. And until you're used to seeing it, you don't even know what the Sherlock's doing. And your eyes will get trained to seeing it. And then at some point you'll go, I don't need that one necessarily anymore.
I agree.
It's great to be able to say that you don't need any indicators, no alert systems, no moving averages, nothing like that. You already see it. When you get to that point, you know you're ready, really ready. It's called naked Forex trading. You
You
just
could be
see
looking
the
at
chart
the charts
and you
like
know,
this. You look at the charts, you see levels,
and you know it.
and you just know where you're going to go. You see
Brian,
it?
are you having class tonight?
I possibly will have a swing class tonight. Yeah. If you are, let me do that since it's not set up in Auvoria Prime yet. Let's see. If you're interested in hearing I'm gonna put my email address in here.
Swing, the trading technique, not the
Swing.
dance.
Yeah. Yeah.
Although that would be interesting, Brian.
Yeah. Well,
Brian and Kim swing featuring Brian and Kim.
that's kind of scary. Let's go 7 p.m. Eastern tonight. Interested. And this will be going into the Hawkeye channel in the very near future, where when you click on the Hawkeye link, it'll go there as well. But I put my information. If you want to see the swing trading stuff tonight, I'll start that around 7 o'clock Eastern. And I usually take 30 minutes. That's pretty much all I do. It's what I do, spend 15 minutes a week managing. Very time friendly, if you're interested. But you'll see all the same things. You'll see the same tools. We trade pretty much the same identical way. It's just different time frames.
Check out our Hercules and see if there's anything new to trade. Aussie yen is or British Aussie still in play. And that seems like it's got more room to go. Looking for pullbacks on that one. British yen, we did the same thing with the British yen. And let's see, anything else new here? Euro, nothing. I wouldn't trade. I'd stay away from the euro right now. I'd stay away from Canadian dollar right now. Like I said, Canadian dollars, they have a banking holiday in Canada today, so probably not a lot of momentum pressure to build the momentum. Everything else is pretty much this is about what we got for the day. How about see how are we doing with the German 30 today? Let's see, take a look at that one.
They're all pretzels with the MMAs, all of them.
So everything's in a consolidation mode. Everything's consolidated, which is really very typical for Monday morning.
Yeah.
Yeah, Monday's not great.
That's
why I love doing swing trading on Monday, because nothing's really happened for the week yet. Normally, even with swing trading, the best entries are usually Monday night through Thursdays. It's crazy how that works.
Yeah. Yeah, everything's kind of everywhere. At the moment, they're all kind of in the middle, in between the 62 and the 200, and they're all jumbled up in between that. It's on some of them. It's kind of, yeah. I wouldn't get into it personally till it figures out definitively which way it wants to go.
What do you think, Brian?
On what?
You should be seeing my.
I'm seeing your Aussie yen and your. Let me see if it matches up. I still think yours is.
Do you see anything different? Yes. Do you see anything different here?
Oh, I see it. I see what you're doing. You got your Sherlock on there. So
Very good, Al.
let's see if it matches up, because that's an older version we're trying to incorporate. And you're on the Aussie yen?
Yeah.
What
Aussie,
time frame are you in? 15?
Aussie yen, 15 minute.
Okay, hold on one second. This is huge.
And I should have this thing on strong, extra strong, I think.
Yeah.
If it defaulted over. Nope, it didn't default over. Here, let me get extra strong. There we go. How's that look?
Mine's loading up.
Now I can. The only thing is with this account, I don't have all the pairs, the indices and things. I just have certain Forex pairs on this.
Where's your pink zone start? Is that 80? Yours starts at 80.78?
Yep.
Mine's at 80.82.
And mine goes from 80.78 to what? Wait, oh, it just changed here. 80.78 to 80.86, I think it is.
Yours is 2 pips off, which is all right. That's close. That could even be the broker.
Yeah, there's probably a good chance that's what it is. I'm thinking the algorithm is going to be the same. It just matters what the feed is.
And then my other one up the top is 81.10 to 81.18. Yeah, you're orange.
Yeah, that's exactly right. 81.10.
I'm not seeing with yours. I'm not seeing your penetration line though. Are you showing a penetration line inside of your orange zones?
No, I'm not. Yeah, that's okay. There's a little difference there.
So my green zone's penetrated too. Yeah. So this is a Sherlock tool, guys. This is a tool that with the default settings is showing you explosive moves out of a particular price area. When these coordinate with a fib number, it's extremely powerful.
Question from Joe Tian. She's asking, is this tool available for everyone to use on the MT4?
It's getting ready to be.
Our struggle
That's
right now.
The plans.
Our struggle right now is getting it converted to the TradingView platform. So at the very least, it'll be available to you on MT4, and you just have 2 platforms up. You just have your TradingView platform on one, and you have this one, the other one, so you can see. It's nice to get everything all on one platform, which is my first choice, and that's where we're striving to get to that point. But we do have, at least we have it available to where it's going to be available on the MT4. It's already programmed, just a matter of how we're going to distribute the information. So that's coming. There's our DAX. Let's see. Let's see if we can analyze this German 30 and see if there's we can make any heads or tails out of this. Right now, we're between the blue. Let's see. Let me get on the 15-minute chart. Start there. That's usually our starting point. I like seeing how this thing ranged from, this is Friday's range right in here. This is all Friday. And then this is from the overnight high to the overnight low. I kind of like this red zone to this red zone, but we're not really focusing on, we're trying to get a little bit tighter ranges on that. Let's see, DAX. Let me see what the range is between these zones here on the DAX here. I will determine whether or not I want to go with just that's a $43 range. Here we got $43 in between these zones. That's pretty normal. Green, red, blue. So right now we're right at the red line. We're kind of right at a point of indecision. From this big move up to this pivot down. Now I'm just going to do the straight Fibonacci's off of this one. Here's a pivot high from the overnight high. Whoops, I'm not doing that one. Down here. And trying to catch the overnight range and see where it's stopping. And it's right here at the red. It's coming out of the lower 25%. We have a nice little pivot low from Friday. Overnight pivot high for the weekend. Came back down, it's retesting this. So right now we have a little bit of a trend line coming in to this area right in here. Extend that. It actually is really kind of forming into a channel. So we have this blue line. Let me just take this one off for a second. And we have this was Thursday's high, Friday's low. Overnight, over the weekend, it made a new high. So we have from this point to this point, here's our anchor, here's our first hit, and this is our playground right in here. This is our playground for the day. And it's in that channel. So now what we're looking to do to see is that, okay, if it bounced off of here and it's coming, if it's bouncing from inside this channel as it gets, which is nothing more than an ascending wedge, we want to be able to wait for it to pull back. Right now, I'd be looking for a pullback into this area to come up and make a new high. But right now, everything's consolidating. We've got a lot of consolidation going on. So right now, you're just throwing the dice to see which direction it's going to go. And I'm looking here for the strength of the euro, which is the red number. And you can see that's pretty much right in the middle. The British pound is weak, dollar is stronger, euro somewhere in between. Not a lot of clear direction. The moving averages are kind of pointing down, pointing up. It's coming into this little range right here. So I'm going to be focusing on this blue zone to this blue zone as far as the overall range.
Well, that's been for this pound yen, Al. I know y'all are focused on something. I've been taking those little small entries, trying to scale in. Man, I'm getting the small positions to hit targets, but not, which is better than nothing. I mean,
yeah, I'm just saying this could be a nice little day trade. This has a potential of being a nice little day trade, as long as what I would do is at this point, I would be making sure that it seems to be on this last pullback, it hit the 62 moving average, exponential moving average on the 1 minute chart. And once you get into the trade, don't drive yourself crazy looking at these 1 minute charts sometimes, especially if you're going to day trade it. If you want to turn this thing into a day trade, which is has all the potential of doing so, what I would be doing is I would just be keeping your stop above the yellow moving average, and I would be looking for the next zone above that. But here's a pivot. Here's the last little pullback. So if I wanted to day trade this thing, I would be using this little zone right here, this little pivot high.
It's still struggling to close over below that 152.10 though on a 15-minute chart.
I would be trying to keep my stop up and around this area. Actually, I don't need another zone here. I already have it going here. I'd probably let's see, grab the right one here. This little zone right here. I would keep this as my stop. I keep my stop zone above the pivot and above the trend line, and then just walk away from it and see where it comes up. Put your stop in. I'd say before I would walk away from it, I move myself to break even, and then just let it ride and see how. Then have your target 2 or 3 of these zones down below, and see if it gets into this area. But right now, it's in straight inside this little wedge. We see how long it took I drew this stick based on this trend right in here. But just pick a moving average or pick a trend line that you can use for as long as it stays inside this descending channel, you can stay in the straight. Once it breaks through that, then you want to start thinking about exiting and looking for it and taking your profit. My theory about it is I hate knowing that it was all the way down here where I could have taken a profit and could have just gotten back in here. But this, I usually get my one little trade of the day, get it in, get out, move on. Nothing I hate more than trying to go for more money and just give it all back. Wait for the next setup. There's always another train coming down the track.
Mm-hmm.
See how this green moving average, how it's respecting where the price may poke its nose up there, but the green moving average has never crossed over. Until it does, it's still going down. Each one of these is just another pullback. Strength is still good. Let's take a look and see if we can take another shot at this. We have a 5-point spread, 3-point spread. British pound is stronger right now on the pullback coming up into our channel. Here's our zone. And actually, this would be almost like a retest area. If it breaks the retest, you may want to get out of it. That's pretty much the long and short of it. If it comes back to the retest area, gives you another opportunity to go in and go short. Now at this point, what I would do, now we did see that we got the crossover here. We got the 1 minute crossover. So if this thing were to, if it can come down and you see the blue line, the 15-minute blue line, it came back down. And if I turn this fib one, you can see it's respecting that. Here's the fib zone right in here. This is basically what I would call the overshoot area at the 15-minute. That's my overshoot. 15-minute strong Fibonacci line, overshot, came into it, and now it's deciding whether or not it's going to keep on going down or if it's going to go back and retest. I wouldn't do these too many times. Maybe one pullback and one other target, and then I would be done with it. These things will usually work in waves of 3. If on a pullback, it's waves of 3, and then on a trend, it's usually waves of 5.
Excuse me, Brian.
Yes.
Daniela has a question for you in the Q&A, please.
Let me go down there. If I can find it. Here we go. I can. Yeah. Let me type that answer to her.
Let's take a look at the UK 100 since someone mentioned that here. Let's draw this one out. See what our range is. This is the overnight range. This is from Friday's close to, it's got Sundays included in this one. Put our fibs. See what range is ranging in. Here's a 15-minute blue line right in here, which it bounced. See if it's going to respect that one. So my Fibonacci is going to be from I'm going to take it down to here. This is the zone we're looking at. Tweak my lines, make sure they're close. This is as close as you can make it. Don't make yourself crazy over it, but if you can tweak them, it's all good. So right now we are in the lower 25% of this down move before it hits this zone. I'd be very careful. Now this looks like it has the potential of being a good target. British pound is strong. When the pound is strong, the indexes generally go the opposite direction. Generally, not all the time. It's a nice little drop, a little retracement. It broke out of this little pivot here, got to close. Now, if we look at this 1 minute chart, I see a little bit of a wedge that's formed. Here's a low, here's a high. Here's a higher low, here's a lower high. And it broke out of the wedge, coming back up to retest it, and then we have the strength to the downside. Goes back up, retest the wedge, and could be looking at a sell stop right around here at the 72.62 level. So let me try that. Sell stop. And we're going to go for stop for $10. 1%. 27 is the position size. Sell stop at 27 limit. So we're going to 72. Gonna get below the bid price. We're in. Spread got me in. 2.5 spread. I like this because it broke came back through, strong candle down, came back up, retested the wedge, and now we'll be looking at the target. See, I need to get this thing way up here. That can be a trouble sometimes. Keep it out of the way. $72 to $82 should be the target. Should be the stop. So $10 stop is going to be with $100 in this in the window here. You can see how far this has moved, and it still hasn't got me. I don't have my commissions out yet. I don't have my spread out yet. There now. Now I'm back to break even, and we'd be looking for a target down here. See, this is at 70, 63. We're looking for a $5 move. We got in at 73, so 73 to 68 would be a reasonable target. Let's see, 68.
Does this tie? I guess it would tie to the British pound.
Yeah, it would tie to the British pound. And right now,
so if the pound is strong, this is going to go.
The pound is strong, it should go down. Yeah, it should go down. If the pound is weak, it should go up. Relatively speaking. Okay. Right now, you can see none of the indexes of the 8 major currencies, none of them are really showing any real. Now, the British pound is starting to show a little bit more strength than the dollar, which is the blue one, and the red one is the euro. So who was that put that and told me about the pound here today? Who was that? Somebody. Thanks for bringing that to our attention. Yeah, Eden said, yeah, thanks for that call and that. And see, that's what makes these rooms so valuable, is that we help each other. Sometimes you guys are seeing things, looking at things that I'm not looking at. And you say, hey, looks like it's starting to move, especially like with the indexes, because I don't have the Hercules helps me. When I'm looking at it, I can tell where the strength is or whether I'm looking at it to go up or down. But I don't have the, when it comes to the actual indexes, that's all I really have to work with. So when you start breaking out a price pattern, start seeing making moves, and that's when it's time to jump to start reassessing the situation. Now my positions, I was a little bit off because, again, so and that's something you have to be careful with when you're trading off a trading view, is make sure you have the position size right for what you're trying to do. In this case, I was position sizing with a 10, but when I saw where my stop was, it was way too close. It wasn't anywhere close to where it needed to be. So just be sure you pay attention to that. But here's my entry. Here's my target, 5 pips away, and my stop is clear on the other side of the wedge. I can actually move this D over here a little bit closer here because this is a lower high. So maintain this trend line. See, I can even see if I took this B, I can take it all the way up here. And you see here's the anchor, here's a hit, here's a hit, here's another hit. Here's the pivot low, it broke the bottom of the trend of the wedge. And now we're just looking for a target from, say, about that, if I can draw a stick. Get my stick chart, move my stick trend line here. And I can take it from this pivot high inside the wedge. It's pivot low. And then where it broke the wedge is where a reasonable target could be. Now I've got my target way out, way before then. Here's my target 1. Here would be my target 2. So target 1's right here at the fib line. Pulls back, and it'd be looking for this to be target 2. So here would be target 1 and target 2 if I were to take different positions. Let me measure this again here. I should have stood this way. It should be vertical line up to here. And then take it from this range to here. Here's where it broke the wedge. Here's where it retested it. And right here is it's already at the target right now. Oh, actually, I take the back. Here's broke the wedge here. There it is. That's what it is. You can see the spread was pretty significant. We got a $2.60 spread on this thing. And that's one thing you have to be a little bit careful with some of these indices is watch what the spread is. How much of a move do you need just to get your commission and your spread out of there? Any questions so far what we're doing here this morning? This one could work out to be a nice little trade here.
Right is
And
good.
here,
It's getting ready to hit the 200 on the 5-minute chart. It's right there. So you may have a bit of resistance going on here shortly.
Right now, we can still follow this moving average right now. So if we really wanted to, we are profitable. Still looking at this being our target. You want to tighten up your stop, bring it on down. Don't want to turn a winning trade into a losing trade. But I would say if it passes this pivot point here, I probably want to take a little bit more of my profit. A nice little drop. This is a nice little drop base. It could come back and retest this little area. You see it's coming very close to that blue fib line. Still some debt that's getting stronger. The British pound is starting to get stronger, so it's getting more to the downside. Such a big spread. It's just I can see where I'd like to see this thing get out, take my profit here.
And I'm looking to potentially get into the pound yen again.
Well, if I were to go and look to the pound yen, I'd just take my profit and then take a look at it. Right now we're up to about $60 and it's still kind of struggling. Well, there it goes. And it still doesn't have me out, but you know what? I'm okay with this. I'm going to close this position. Take a look at the pound yen. All right, we're up in a retest zone.
Mm-hmm.
We
It
have
could
all the
not-
moving
it
averages
did-
going in the right direction.
It couldn't, on a 15-minute, it could not close below the 152.10. So we could have potentially a pretty decent pullback at this point.
Right. So from a swing trade, yeah. So now so this becomes a dilemma. Do you want to, if you're still in this trade, what do you want to do? How do you want to play this one? It's up in the retest.
Yeah, I'm in it. I just got to touch it to 152.23. Another small position to take it down to the 152. Was at 13 or whatever above the. And we'll see what happens. I put a very small position, like I always do, very small to begin with. But I've done this 1, 2, 3. This is my third time on this pair. And nothing. There hasn't been any major pullbacks, so it's kind of been fun.
Yeah,
but my position size is not great.
We're still showing strength to the downside with the Japanese yen.
Mm-hmm.
But we're getting the pullback. We got the flip here. We have the flip here for this up move. So at this point, for me, I would be looking at. Let's take a look at the 5-minute chart and see what that tells us here.
Yeah, I'm just looking at the 15 at this point.
Remember, I said this is basically if I were to try to make this into a day trade, I'd have my stop up here. So we're still well below the stop here. So now it's just a matter of we did the crossover here. We do not have a close above the trend line. We do have a little head fake up here. And if you look at this 5-minute chart, you'll see there's a little doji right here. This little doji has a strong move down. Next candle, a lot of indecision right in this area.
That's the zone I'm looking at.
Yeah,
that's why
pay attention
I got
to
in.
the dojis. You have to pay attention to the dojis.
And we've upped our standards.
No.
Exactly. Those dojis like to be noticed.
The dojis is up to standards, so it's up in ours. I still laugh at that.
See, right
Good
now,
5-minute candle.
This is kind of in a retest zone. I call this a retest. It's retesting that little doji. We have a little trend line. So we still haven't made our target down here at the bottom from this last move down, which tells me this thing does have some room to the downside. This is just a little bit of a head fake.
What's amazing about this is the Sherlock on a 5-minute created a demand zone, and the penetration point is right at the blue fib line. So it's already penetrated, so I'll be out of it before it gets down there. But it's pretty amazing how that 152 is holding so strong.
If I can get a 5-minute close below this red, so right now we have a little what we call a pass and check. It came down, passed it, came back up, checked it. If I can get there's a little bit of a wedge here. Do you imagine that? These darn wedges, they just keep popping up all over the place. Still have our major target down here. And so we have let's see if I can draw one out here. I like the top of that doji for the start of it. There's a low. Pretty much a flat line.
Mm-hmm. That concerns me. This move right here, moving back up.
Actually, I kind of like this little area, this little thing right there.
This could be very well creating that pivot, rally base, and then pop up.
Yeah, we got a lot of wicks right here. So notice like every time it came down, buyers came in. Came down, buyers came in. Came down, buyers came in. I want to see a break. I want to see get back into this trend line before I want to take it short. And with that, you're still going to be, let's see, what's the top of this thing? We have 24 to, we're looking at basically 12 pips. I mean, you can still, if it breaks this bottom trend line, you can stay within your 15 pip stop of the green line. So I would have my stop up like this. Be moving that down to this area.
Excuse me, Al, I have a question.
Uh-huh.
Why did you choose that candle rather than the green candle to the left of it, the lower candle?
This one?
Yeah.
Because I can see where this was sort of like a head fake. If I one, it made the angle too steep for one, and
Okay.
I wasn't able to really catch these. And this little area right here is, to me, is more significant. Now, having said that, we have this little overshoot area. This thing just wicked down. We did not get a close below this blue line. So by the time this thing breaks the wedge, if it's strong enough to come down and close below this blue line, now we're looking for a little bit of a pass and check. So here's what I'm looking at here. If I do the ABC here,
Thank you.
we have it move down, close, come back up, retest, and then come on down to pretty much around this area right here, or actually to the bottom of the next, wherever the bottom of the trend is. So this has potential to be a nice little move. Again, right back down into this, but I want to see it, but I want to see a close below this blue line. It came down, buyers came in, pushed it right back up again. This range in here is what, 24 to 24 is about it's about a 14 pip range from this bottom pivot to the top of this. That's really where it's kind of range bound. Take some of this stuff off so it doesn't get too confusing for you. So here's a pivot high, here's a pivot low. If I take that, then I'd have to pretty much go on up to this one. If I flat bottom it, now you can see there's quite a bit of range between here and here. There's actually, this thing's probably going to go sideways for a little while. I'm looking at 52.18 to, you look at 9 pips. You're in a 9 pip zone. Again, I'd like to see the range being a little bit more. So I'm going to stay out of it right now until it gets out of this triangle. This is a little wedge here. Too many wicks coming in. I think this is the overshoot. I like to say close into this overshoot area, come back up and retest the fib line, and then go on down. Now, if you got in short up here, I would not be pressing it too much until there's a good, and you can probably get your 7 pips from that C area, from this retest area to the overshoot, but it's just making lower highs. It's probably going to make a higher low. I would expect a higher low somewhere around in, probably this area. This looks like it's trying to kind of sort of trying to reverse a little bit.
Good day today. I made one mistake when I accidentally pushed buy on this thing. I meant to push short. That cost me the spread.
On this pair?
Yeah, I did it earlier
Okay.
today. That was my first trade of the morning. It was me a Monday when your first one goes opposite. Other than that, 1, 2, 3, 4, 5, 6 wins, 1 loss.
Are you okay? 100 deal. Here's my target zone. Look at it. See where I drew this stick?
Came right to it.
Look where it came right to it. It's rejected. Here's our fib line, our blue fib line's right here. Passed it, checked it, came back up. This thing could very well start to reverse, but you still have this downward pressure here. So, and we still have, now the dollar's gotten stronger. We're getting closer to the open of the US market. So the dollar's getting stronger. So if you're profitable and you took profits, I would probably, again, chalk it up as another win. See if it's going to come and retest this wedge line, the C wedge, the AC wedge. This is a significant trend line right here. moving averages have crossed over. So right now it's getting into a little bit of retracement. Now here's the origin of the move. This is the last strong candle down with the pullback. I like this. I do like this tool right here. Here's the origin. Bring it on down to the pivot. Take it on up. I want to see 40. And we're just going to see where it stops. I'm going to be looking. It's going to probably come on up to retest the wedge. This little zone right in here. This would be where my stop would be. It's as high as it got. It's only gotten this far. Right now, it's retraced from this point to here. It's right at the 50% retracement. If it goes up higher, then basically this is a 10% overshoot of the peak. That gives you whatever this range is. It gives me a 10% for the stop area. And it's usually because if that's a pivot high, that'll keep us well off our way for our spreads, or should be. Still not done yet. Here's a nice rally. Here's a little base rally. It could go on up a little bit higher. Right now, the euro is in the middle. Dollar's gotten not all that few minutes ago. The dollar was all the way down here to the zero. Now it's taken over. We're coming right up on 9 o'clock. And now what's happening? The dollar is taking positions for the pre-market of the U.S. Markets to open up.
You'll see a big move on that on Mondays for sure.
What does our S&P look like?
S&P. S&P is still poised to continue up in the big picture.
Here's a wedge, strong move down. Here's our wedge. After a while, once you start looking at this stuff, your eyes will just go right to them.
And you'll see them in your sleep. You really will.
You'll dream about them.
You will dream about them.
Let me take this one up a little bit higher here. I kind of like this one. This is probably a little more significant here. There you go. There's an anchor. There's a hit. Now it is breaking out of the wedge area. But you saw this big wick right here. It's got to get through this. It may have broken the wedge, but it's got to get through this B area before it's going to see this big old extended range candle right here. Once it's going to have to break through this B. It actually initially it started coming down like this, and that big wick up. So that drove a lot of this area. But now right from here, the target's going to be up here. There's where my target would be. If I'm long on this thing, this would be my target area. To come back and retest the origin of this big candle down. This is all now part of the pre-market. Dollar is weak, or excuse me, dollar is strong. Now this is a little bit contrary to what we would normally see. The dollar is strong and it's going up. That's not normally the case.
I was just getting ready to ask, is that normal?
No, that's not normal. but that's where you got to you can't hang your hat on that. It's just more of a guide. Even though this tells me that this thing's going to come up here and just tank is what it tells me. What are you laughing at?
Daniela's comments. And then I'm now seeing, instead of wedges, I'm seeing wedgies. Nobody wants to see that.
No.
Seeing a lot of that during the Olympics.
Oh my word.
And you know you're on global television, so you definitely don't want to be messing with it.
Exactly. I'm not sure what's worse, the actual wedgie or the cure for it.
I'm trying to figure out how those triathletes who do the swimming and the bike riding. Oh man, that's got to be rough.
Right now with this straight one, I'm looking at the 1 minute. Let's take a look at it on the 5 minute. Eva,
There's no time for humor.
Eva, what say you about this S&P trade? Well, actually, it's not a trade yet. We're just positioning.
The S&P, well, hang on, let me look on my chart because I have to kind of zone out to see.
So I'm looking at this as being a retracement to come up here to maybe take a position to go short. The dollar is real strong right now. This is just a pullback, but as it's pulling back, I'm still saying this is still going. This is you'll see this a lot at the opens of the sessions, where you get a lot of contrary movement before the market opens. It comes up here, and all they're doing is they're just taking their positions. And as soon as that market opens, I think this thing's just going to tank.
I think it's going to go down as well. I agree with you on that, just by what I'm looking at here. Looks that way on the 15 minute, and I think that way on the 5 minute as well.
We are right at showtime, so. Anybody take any trades this morning? Anybody make some money this morning?
I did take some. I did. I don't trade every day, but when I do, I usually trade with Al.
With that, it's 9 o'clock. I think we're going to call it a session here today. Again, it's Monday. Just look for those wedges. Look for the strong move out of an area, extended range candle. That's what ERCs, extended range candles, especially on like a 15-minute chart. That's like this one right here. And then you look for a pivot high. You look for the start of the candle, pivot low, lower high, and then higher low, and then draw your wedge. Let me draw it here real quick.
Evens 1-3 out of 3.
Nice.
Mm-hmm. And Joe Tian on the Kiwi US.
Kiwi US, that's an interesting one because that was kind of in the middle of everything. But hey, as long as it works out.
Well, that's the thing, right?
That's it. Everybody has their own way.
The key here is what we do here in Hawkeye. We try and find a pivot high and pivot low. And that's our playground. That's the area that we're trying to operate in during the day or until it breaks out that area. Inside that area, and I usually draw this on a 15-minute chart, this is our playground. And I'm just looking to see where is it trending inside that playground. And that's oftentimes you can draw our Fibonacci's based on that. Here's the playground. Here's the lower 25% of the playground. There's a lot of different ways of drawing this and looking at these things. Here's the upper 25%. You say, okay, when it gets up to this area, I'm going to take it short. When it comes down here, I'm going to take it long. Find a wedge. Here's the bounce. It's bouncing. It's probably going to come up. The market's going to open up, drive it on up here, and then it's probably going to make another move to the downside. But right now, this is your playground. And you have a nice little range here between 25% and the other 25%. That's a $10 move. On the indexes, that's get your spread out and wait for the breakouts. And so with that, we'll see everybody back here tomorrow. Hopefully my voice is getting better a little bit every day at times, getting a little bit better. So, and as I always say, stay green. We'll talk to you tomorrow. Thanks for being here, and we'll see you then.
Bye. God bless.
Thanks, everyone. See y'all tomorrow.